Hello friends, in this lecture we will be learning something about working capital management. And in working capital management, what we are doing is debtors management or receivables management. Now try to understand, our company is right now having a policy, say X Limited as a company is right now having policy to give its debtors 30 days credit period. Why people give credit? To increase the sales? Is it all right? The question is, they are planning to increase this credit period to 40 days. Is it all right? So what is the present situation? Their credit period is 30 days. What is the proposed situation is their credit period will be 40 days. Now the question arises whether they should increase the credit period or not. Is it all right? See, I will tell you some of the advantages, that is benefits, some of the disadvantages of increasing the credit period. Now it is very simple. If you increase your credit period, then your sales will increase. But believe me, financially increase in sales is not a monetary benefit. Try to understand. Increase in profit because of increase in sales is my financial benefit. Increase in sales just does not, it also have a cost. Is it right? Try to understand, if your cost price of something is 9 rupees and your selling price of the same thing is 8 rupees. If you sell this 1 crore product, then you will be having a loss of 1 crore rupees. Is it all right? Then increase in sales does not mean anything unless it increases the profit. So increase in profit is one of the benefit of increasing the credit period. Is it all? Now, what are the disadvantages? One is bad debt and collection cost. This both will increase. Is it all right? Another, interest on debtors will increase. Try to understand, because of debtors you are getting your payment late. As you are getting your payment late, your business is to you have to run your business. So either you will have to take a loan from a bank which will be higher than previous one when the credit period was 30 days. So interest on money stuck into your business, either interest cost if you are borrowing expressly the loan, or opportunity cost should be considered as an interest. Interest on debtors will increase. Is it right? So I'll give you a simple answer. Find out monetary answer of benefit. Find out monetary answer of your disadvantages. If benefit is greater than disadvantage, then you should go for 40 days. If benefit is less than disadvantage, you should not go for 40 days and you should keep 30 days credit period. This is logical idea of working capital management. I'll be calculating one question and we'll be understanding how to solve questions of working capital management. A trader whose current sales are 4,20,000 per annum and an average collection period of 30 days, so this is a current period, wants to pursue a more liberal credit policy to improve sales. A study made by a management consultant reveals the following information. Increase in collection period by 30 days, 10 days in 30 days will become 40 days. 30 plus 30, this is 60 days. 30 plus 45 is 75 days. Increase in sales is given. Present default, that is bad debt and anticipated, is given. The selling price per unit is rupees 3. Average cost per unit is 2.25. Variable cost per unit is 2. Current bad debt loss is 1%. Required return on additional investment is 20%. Assume a 360 days a year. Which of the above policy would you recommend for adoption? Let us solve this. We'll be finding out first our current profit. What profit currently I am earning? Please try to understand. I will be considering only the cost which are relevant. Sorry, so I'm not considering administration cost. Why? Because administration cost is going to remain same whether I go for 30 days or 45 days or any other days. So only cost which are relevant to this particular decisions I'll be taking into consideration. So what is current policy? In days is 30 days. What will be sales? Sales is rupees 4,20,000 per annum. What is selling price? 3 per unit. Is it alright? So how many units will be there? 4,20,000 divided by 3. Four lakh 20,000 divided by 3 is 1,40,000 in units. Total sales is 4,20,000 minus variable cost. Variable cost is 2 per unit. 1,40,000 into 2 is 2,80,000. Remaining will be 1,40,000 will be nothing but contribution. Let me go for fixed cost. Average cost is 2.25 at this level of sales. So 0.25 will be nothing but fixed cost at this level of sales minus fixed cost 0.25 into 1,40,000. 1,40,000 multiplied by 0.25 will be 35,000. Will be my profit. It is 1,05,000. Which are two relevant costs for debtors? One is bad debt, another is interest, and that both will be solving. What is bad debt in current situation? The current bad debt loss is 1%. 1% of 4,20,000 is 4,200. Sorry, it is bad debt. And this is the most important part. Interest cost. Now try to understand. As you are borrowing money from your debtors, see, sometimes you go to a bank will say, we will not give you 4,20,000 rupees. We will just give you 2,80,000 rupees, which is variable cost of your sales, because for fixed cost you take term loan. For variable cost you take working capital loan. Is that all right? So interest can be calculated on number 1 variable cost, or number 2 total cost, or number 3 is selling price. Sir, which approach is correct? Believe me, all 3 approaches are correct. This is just an assumption. Sir, which is good in real life? In real life, you will be knowing whether you are borrowing variable cost, whether you are borrowing total cost, or whether you are borrowing selling prices. In absence of information, you may not go for selling price but total cost or variable cost approach. interest is borrowed or interest is levied on variable. See, if only variable cost is given, I'll tell you why only variable cost is given. See, 35,000 will remain same in all the situations. If it is remaining same in all the situations, there is no meaning of writing 35,000 because our relevant answer will be same. Is it all right? So when fixed cost is not given in the question, you should go for variable cost. Otherwise, you may go for total cost. Here I am going for total cost. Please understand, it is not a note, it is assumption that interest will be levied on total cost. What is the total cost? 2,80,000 plus 35,000 is 3,15,000 multiplied by, but this is the total answer. I need to find out the debtor's answer. Now what will be debtor's answer? What is the current period? 30 days divided by 360. Is it all right? Let me see whether they, yes, assume 360 days a year. Is it all right? This will be debtor's answer, and interest will be levied on debtors, and only 1% is given, and that we need to take as interest. Required return on additional investment is 20%. See, what does this mean? This is not an interest cost. This is an opportunity cost. You are already having money, but even if you are having money, you should consider always your opportunity cost. So opportunity cost is 20%, and your answer will be 3,15,000 multiplied by 30 divided by 60 multiplied by 20%. It is 31,500. 31,500, and my total answer will be I feel this is very big number. Let me recalculate it. It is 3,15,000 multiplied by 30 divided by 360 multiplied by 0.20 is 5250. And my relevant net profit will be 1,05,000 minus 4,200 minus 5,250 is 95,550. And please understand, if this relevant profit is higher in other case, I will be going for that particular situation. Now all the calculations will remain same as given in the questions, and we'll be doing all the situations and finding out this relevant profit answer. So let us go for the additional situation. Start. What is the options? 40, 60 and 75. 40, 60 and 75. Start. Proposal 1, proposal 2, proposal 3. In 40, there will be increase in sales of 21,000 rupees. So this will become 4,41,000 rupees. Start. In this, it is 52,500. 4,72,500. And in third one, it is 63,000 rupees. 4,83,000 will be proposed sales. Start. I need to find out units answer also, because variable cost and fixed cost will be based upon units. See, variable cost is directly proportional also. You can directly do cross multiplication and find out the answer, but I am finding out units even. So 4,41,000 and per unit selling price is 3. So 4,41,000 divided by 3 is 1,47,000. 4,72,500 divided by 3 is 157,500. And 4,83,000 divided by 3 is 1,61,000. Multiplied by 2 will be the cost. Is it alright? So This will be 294. Those are units, right? In blue color pen it is units. Is it right? So 1,47,000 into 2. 294. 1,57,500 into 2. 3,15,000. 4,83. Sorry, 1,61,000 into 2. 3,22,000. Let me find out contribution. 4,41,000 minus 2,94,000. 147. 4,72,500 into 3,57,000. 4,72,500 minus 3,15,000. 157,500. 4,83,000 minus 3,22,000. 1,61,000. Please understand, my fixed cost will remain same. Fixed cost is having a nature that it always remains same. Stop it. Remaining will be my answer. This will be 1,12,000. 122,500. 1,26,000. But that is also very easy to find out, as it is directly given. 1.53% and 4%. 1.5%, 3% and 4%. So 1.5 into 4,41,000. 4,41,000 into 1.5% is 6,615. 3% into 4,72,500. 14,175. And 4% into 4,83,000. 19,320. The only point will be interest, and believe me, interest is very easy to find out. You just need to find out total cost, that is variable cost plus fixed cost, and in this case it will be 2,94,000 plus 35,000. 2,94,000 plus 35,000. 3,29,000. 3,29,000 into 40 divided by 360 will be debtors into 20% will be nothing but my answer. Let me also write down for this. 3,15,000 plus 35,000 will be 3,50,000 multiplied by, I am taking only variable cost and fixed cost because my assumption that I will be calculating on total cost, into 60 divided by 360 multiplied by 20%, and in this case it will be 3,57,000 total cost multiplied by 75 divided by 360 multiplied by 20%, and this 3 will be my interest cost. Let me find out in my calculator. 3,29,000 into 40 divided by 360 multiplied by 0.2, it is 7,311. 3,50,000 into 60 divided by 360 multiplied by 20%. It is 11,667. Last is this will be 3,57,000 into 75 divided by 360 multiplied by 20, 14,875. Finding out relevant profit, I will be getting the answer 1,12,000 minus 6615 minus 7311. It is 98,074. In second case, 1,22,500 minus 14,175 minus 11,667 is 96,658. And in last case, 1,26,000 minus 19,320 minus 14,875 is nothing but 91,805 will be my relevant profit for management. Now you'll say me, sir, is this my net profit? Believe me, the answer is no. This profit is a relevant profit for this particular decision making, and where I am having highest in second case, so this option I will be selecting. I will be changing my policy from 30 days to 40 days. Sir, why it is not my net profit? I have not considered n numbers of other expenditures like salary, like any other expenditures. If they are included in variable cost and fixed cost, yes, I have found out my net profit. But there are n numbers of expenses which might remain same in each and every situation, which we may skip like this. Believe me, if you have skipped your fixed cost, then also your answer would have remained to find out, to increase the credit period to 40 days. So the cost which are same is irrelevant cost for decision making. Once this decision is taken, the answer is over. Is it all right? This is how we solve some of the questions of working capital management.